morning, Karen.
Hello, Madison.
I wanted to sit down with you today because the news has been making some pretty alarming statements about the market.
Oh, that's unusual, isn't it?
Oh, I know,
The news
shocking.
making alarming statements.
Yep. And we've been hearing from a lot of people that it is creating a lot of fear for the public. So we wanted to see if you agree with some of what they're bringing to the public or what your true analysis is of the market and the possible trajectory for it.
Well, that is such a great question because I don't watch the news a lot. In fact, I rarely watch the news, and I read it enough that I need to stay up on what's happening in our community and in the market, and of course the world in general, so that I know how it's going to affect us, because I like to work on things that I can change and not things that I can't. So the more information we can give our sellers, but what we do here at the Bernardi Group is we work on stats and real statistics instead of made up, fear-mongering things. So it was so interesting today at our meeting, wasn't it?
Yeah.
Because, and please help me with the stats, but basically the market at this time is almost exactly what it was in 2020.
Yep.
And those were good markets. That was the first year, of COVID, the first full year almost, or 10, 11 months that it affected the United States of COVID. The market was really on fire, but the inventory was a lot lower. We do have about the same amount of homes on the market now. It's just that at that time we were accustomed to, that seemed like the hottest market ever, and my gosh, things were going off the market.
Yeah.
And it was, and now we do have more days on the market than we had then, but we have about the same amount of inventory. We have about the same amount of things going under contract. It's just very interesting, to look at it, because now the one thing that has changed quite a bit, of course, is our interest rates. But at that time, interest rates, I think, were 4.5%,
Yep,
if I'm
right
correct.
around
Now we are now at 6.5% or 7%, and that's quite a bit of, quite a difference. But from the very low and the very hot of the market, where the interest rates were 2.78%, we're a distance from that.
Yeah.
But are we, am I willing to run around and say the sky is falling, the sky is falling? Absolutely not. We're still selling good houses at good prices that are in good condition, and we're selling fix and flips, and we still have people that are out there that are very optimistic about the market, as we are.
Yeah, definitely. And what are some of the tools you're seeing sellers use to help incentivize buyers to buy their home?
You're better at that than I am. So you can tell our listening audience. But
Well, so there's obviously the 2-1 buy downs where you can get a lower interest rate for your first year by 2%, and then by 1% for your second year, and by the third year it reverts to the interest rate you locked in. But the intention is that you can refinance when rates come down, which they are predicted to do next year.
Into the 4.5 range, you were saying.
4.5 to 5,
Right.
yeah. Or just a general interest rate buy down. It doesn't
Right.
have to be a 2-1 buy down program. And then there's obviously the standard credits and offering a very reasonable price, trying to get ahead of the market.
It's so good. Well, it's so interesting because I'm sure that people that didn't buy a home at 3% or 2.78 or 4% or whatever are feeling that, oh darn.
Mm-hmm.
And there are sellers that are out there going, oh darn, I missed the top of the market too. Well, having sold real estate for over 40 years, I've seen a lot of this. And what I know is you buy and sell based on your life needs. We are not commercial real estate brokers at the Bernardi Group. We buy and sell homes that people live in. We do sell apartment buildings, things like that. But I mean, our principal business, our primary business is people that live in their properties. And so over the years, you're probably going to stay in your home at least 3 to 5 years. So if you buy now, you're more than likely to make money. If you sell now and move on to a different home, if it's less value, you're making money there. If you buy a home that's more value, you're protecting your equity in a way because you're maybe spending less than you would have on that home.
Yeah.
So it's just based on you and your family and your individual needs, what you need to do at this time. But, I just have to tell you, I've invested in the stock market and I've invested in real estate. And my wealth is primarily, the majority has come from what I know and what I've seen and what I've read are the wealth makers, and that is real estate. So what I know is just keep investing and keep calm and make good decisions and hire a good real estate agent like the Bernardi Group. Thank you.
Well, thank you.
Thank you, my dear.